please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Taking out time to analyze a Sebi circular which came last month. Although it's a month old, it's something the market has not concentrated on because of earnings and other macro concerns. But what this circular did is it has barred fund managers of Indian origin from managing foreign portfolio money, and it is applicable to fund managers of Indian origin who have more than 15% economic interest in the fund or in the AMC. Now, this is part of Sebi's and the government's prevention of money laundering activities. Obviously, the underlying belief is that any fund managed by Indians abroad and where the Indian is owning more than 15% of the fund or the AMC would be, probably a money laundering candidate. Looks like a very harsh kind of measure. But let's ask people who could be affected. Nandita Parkar, Managing Partner of Karma Capital, joins in, as does Sudhir Kapadia, National Tax Leader of EY. Nandita, first thoughts, you would be impacted?
All of us are impacted.
Okay.
So, we launched an India-focused fund in 2004. We were the first ones to come up with an India-dedicated fund. In those days, there was no investment case for India. So we were the first ambassadors of the India investment case. And after me, a whole host of people have been launching India-dedicated funds. So there are about more than 75 of them. They're all affected.
Okay,
yeah.
So
it's unheard of.
No, I agree with you. Have you spoken to Sebi, and are they able to see your side of the story?
So we have spoken, and my guess is that the diktat for this is coming from the ministry and from some silo within the ministry. I also think that this kind of gunshot policy making is very counterproductive. It's gone on for long enough. And I think that what happens in developed countries is when new policies or new regulations are being formulated, usually the government will invite senior members of industry and stakeholders to come and give their comments. There might be a draft paper that would be put out, and people would be collaborating and looking at the various pros and cons and the consequences intended and unintended of such regulation. Whereas in India, this has not been happening. And I think it's time for sort of a very proper look at how policies should be formulated, and so that this kind of discrimination, which is so blatant and awful, should not happen.
So what kind of money are we looking at here? How much would be at risk if these trades have to be, say, ended by October?
So we're estimating something between $15 to $20 billion.
Oh.
That's quite a bit of money. Let's get Sudhir Kapadia into this discussion as well. Sudhir, what is your own understanding of this circular? It seems a bit bizarre now as to how the entire community, could sort of suffer, and we're looking at big money, $15, $20 billion. What's your own understanding, and you think it could come through?
So I think 2 points. One is I agree with Nandita that I don't see the logic in coming out with a circular without having consultations with stakeholders and at least getting 360 degrees views from everyone. I think that should be a practice which should be followed in future. I think the second point, looking at from a regulator's perspective world over, we know that there is an intent to get more information, more data, and use all tools available to, protect the base, anti-money laundering objective, etc. But what I fail to understand is that why do you want to prohibit a particular class, that too of Indian origin, from having control beyond a particular limit? If you look at the FATCA example, would you not rather have the data with you? You say, okay, you are investing more than this threshold or you are controlling more than this threshold. We want the information. You are talking about technology, you're talking about data mining in various spheres of government policy. use that data and track wherever you think there is, potential wrongdoing. I think that would be a more mature way of handling it, and this unintended consequence, which seems to be unintended, of actually prohibiting people of Indian origin from money management, which is just bizarre. And I'll just make one quick additional point. As we know, 9A in the Income Tax Act came in for a very laudable objective of encouraging money management firms to be set up in India. Even if the offshore fund is outside of India, why not have the money management firms in India? Now think about that. You are encouraging that under 9A of the Income Tax Act. And here you are saying that, by the way, when you appoint the money manager, you cannot appoint a person of Indian origin.
Yeah.
No, so there's clearly, it's not even,
Mr. Kapadia, is there some ambiguity still regarding high-risk jurisdictions? Is that even defined?
Yes, I think that's a great point as well. You see, I think on high-risk jurisdictions, frankly, there is so much, interpretation here in various laws that it just increases the uncertainty and subjectivity. One suggestion could be the Financial Action Task Force has actually has a well-defined list. It's a compact list after looking at, the global jurisdictions. India should adopt that, these rules or these kind of notifications from Sebi, if at least they look at that list or link it to that list, and global custodians understand. Otherwise, saying that it is high risk by itself, as I said, is only a subjective interpretation. There is another way of looking at it, link it to the Income Tax Act, which talks about non-cooperative jurisdictions. The only one which came out was Cyprus, which has also been withdrawn because they complied with. But at least in future, if there are any non-cooperative jurisdictions, then those can be considered high risk. I don't see why, or let me put it this way, it is better to define it. And you can take your choice, define it as it is done in an overseas body, or define it as it is done in a local legislation, as I said, like the Income Tax Act.
Okay. Well, we've actually run out of time, so let me just try and squeeze in one last question. Aditya, you were telling us you've made representations to Sebi and the Finmin. What have you got out of that? Have they stonewalled you completely, or is there some sort of negotiations there? And also, even if the Finance Ministry tries to enforce this, do you see a lot of funds altering their structures or, changing their model to get past it?
So let me answer the first question. We're now reaching out to the Finance Ministry. As you are aware, the Finance Minister has been unwell, and a new man is at the helm. So we're very hopeful that we'll be able to make a representation to the Ministry and let them see the consequences of this are pretty dire. Okay. It also sends a very bad message to global investors of what India is trying to do here. And I think it's high time we need a little bit more consistency in policy towards foreign investors.
Fair point. Out of time, Nandita, and I do hope things will alter.